The demand for money is the actual desire to hold cash, currency or demand deposit accounts, and cash substitutes, money market funds, etc. It is true that the supply of money is a principal factor in the degree to which the effects of inflation are experienced and felt. But the effects of inflation, an increase in the general level of prices for most goods and services, is also influenced by the demand side. 12 years ago, when the Federal Reserve unleashed their trillion-dollar answer to the credit crisis and the economic collapse, almost no one was thinking about the demand side of the equation, the desire for people to hold and save money. Focus was almost exclusively on the supply side, liberal extensions of credit, targeted relief measures involving the creation of new money, low interest rates. Most expected higher prices for goods and services, and the possibility of runaway inflation became a topic of conversation. But we didn't get the runaway inflation or anything close to it. Why? Everyone forgot about the demand side of the equation. The desire to hold cash increased. Individuals and companies chose to pay down debts and hold money instead of borrowing and spending. For 10 years, we heard about the Fed's concern about hitting the 2% inflation target. Their efforts did not yield the expected results, even with the obvious inflation that is currently being created. In an effort to stem the tide of last year's economic collapse, focus on the supply side effects is short-sighted. The decline in economic activity, a high unemployment rate, and a desire to reduce debt are indicative of a situation that is more characteristic of deflation. When people decide they need to hold cash, then inflationary pressures are lessened, not increased, and there isn't much the Fed or anyone else can do about it. Finally, the expectation of continued inflation won't keep it going indefinitely. The large scale of weak economic conditions is indicative of a society that has become cash poor. Most people simply don't have enough money. The demand for money is accelerating. As the demand for cash increases, people begin to sell things, anything and everything. It will require a deflationary collapse to heal completely and recover from the ill effects of the past 80 years. Historically speaking, long periods of entrenched inflation always end in economic collapse.